Good afternoon, everybody. Welcome to your Wednesday edition of the Trader Merlin Show. It is the day. It's FOMC day, as my graphic will clearly state here for show number 1119. And as expected, rates were held the same. Oh, Garfield, you're just teasing us in Cozumel. I hope you have a fantastic time in Cozumel. I love Cozumel and Uzumahara are some of my favorite places. But, of course, I went when I was 17. So just a wee few years ago. I'm sure it's a completely different world now. Anyway, I hope you're having a great vacation. I hope the rest of you just had a great trading day. So let's dive into the FOMC meeting. Right? What did Jerome Powell say? What did he not say? And I don't think that there was really, from my perspective, any surprises. We expected it to stay at 4.25% to 4.5%, not giving in. Yeah, the popcorn trade. You know, we call them the popcorn trade because typically you get tremendous volatility. Today really wasn't that volatile of a day. Here's your chart of the S&P 500. And you can see right as that announcement was made of no rate cuts, keeping things right where they're at, it just shot down, but then it wasn't that dramatic. I mean, I've seen some where it's just really big declines. At its most, the market dropped 0.63%, but over the rest of the day, it erased all those losses, and actually at one point was much, much higher. You know, we mentioned it was down 0.63 at one point. At one point, we also hit a high of 0.77% higher than when the announcement was made, and ultimately ending the day, well, let's get the exact number here, ending the day up 0.35%. So all in all, you know, things were rather decent and much calmer than normal. And I think it has to do with, I think everybody here was pretty much expecting this action. Now, I did go on a limb and say, I think I know what's going to happen, right? I went out and I said, Steve Leisman is going to show up and say, hello, Jerome Powell, Steve Leisman, CNBC, and quiz him on, we've got jobs steady. We have inflation dropping significantly. You know, why won't you cut rates now as opposed to waiting a longer term? That's what I thought was going to happen. And unfortunately, it wasn't Steve Leisman that asked that question. It was Edward Lawrence of Fox Business basically answered those questions as is. So I got the question right, just had the wrong person asking. And bottom line is, if you followed what was said today by Jerome Powell, again, I don't think anything was out of the ordinary here. I'm reading off my cliff notes over here, but he cited everything we've talked about, and maybe we should become the Fed here, our own little chairman. We have more than 13 members. We'll have 50 or 60 or 100, depending how many join here today. He did mention quantitative easing. He's mentioned we're going to continue the tightening. So easing not there, Jeff. It was tightening that he's going to continue to do. But what did he really cite? His main points were that we've got jobs steady, which we talked about the other day. It's 4.2% unemployment. We have inflation dropping. Now, that, of course, is with the PCE price index. If you go year over year, that's the number that he was focusing on PCE. 2.3% is the number he's got for year over year, which, hey, you know what? I think they'd be very happy, as Bill Addis will probably tell us tomorrow. He could do a victory lap off that one, and I think he should if he got us back to 2.3 and maintained it. That's going to be the real tough part. Now, the other part here, I'm trying to run through my list here. He says, despite heightened uncertainty, the economy is still in a solid position. And I think we addressed that earlier this week when we said, look, you've got unemployment's at 4.2%. That's great. The only bad part here is GDP declining. And his comments were interesting. He says, the new administration is the big challenge here. He says there's 4 big challenges they present. He said trade, immigration, fiscal policy, and regulation. And again, he cited, just like we have, that tariffs were the biggest challenge for them. He says, of all the things that I could say today, it's uncertainty. Uncertainty is everywhere. And I've been saying for quite some time that I think it's better for the Fed to hold and wait and see if they actually do need to take an action as opposed to being proactive, because being proactive in an environment with so much uncertainty could rock the boat too quickly, right? And I think that's probably a good analogy. If you're doing the right thing in a boat, so let's say, for example, you got a little rowboat and you've got 2 really obnoxious kids that are jumping all over the place and causing chaos in there. What do? You put one foot on the left rail, you put one foot on the right rail, and you keep your balance right in the middle, and you use your legs like a shock absorber. And I kind of feel like that's what Jerome Powell needs to be doing right now, is not giving into one move to one side or the other. Wait. And unless that boat rocks so far that it actually looks like it's going to capsize, you keep kind of straddling that fence. And that's kind of what I feel that he was saying today with his comments is, we've got tons of uncertainty. That's okay. We are in a better position, and he said that we're in a better position if we just wait. He said the cost of waiting further are very low, and therefore we'll probably just keep holding on. Now, I did hear some other great questions there that came up, and Steve Leisman of CNBC said, which side of the mandate is going to need urgent care first? And it was one of the few times I really saw him like kind of him and hawing in uncertainty. And remember, which side of the mandate is going to get urgent care first? What that means is he going to jump on the job side of things to keep full employment, or is he going to go for the inflation side of things? And remember, both of those numbers look really good historically. Inflation was a one-off data, but if you look at the unemployment numbers, he said we are at or near full employment. I would argue we're at full employment at 4.2%. So I guess the big question for you and I now is, when do they raise? Now, assuming that things remain constant, and we're going to get Bill Addis on the program to talk about this one tomorrow, assuming that things remain steady and constant, which we know is never going to happen, but we have this period where all of a sudden the inflation numbers decline significantly in the latest reading of core PCE price index. You have unemployment, which is kind of lingering right around that 4.1 to 4.2 mark. It's just in there, no big deal. At some point, if we get more data, and I don't know whether that's the next meeting, which is 6 to 8 weeks out. I'll actually give the exact date here. Next meeting is going to be June 18th. And here's the probability of rates at that meeting. Right now, as of today, there's an 80% chance that rates stay the same and a 19 or 20% chance that rates drop 25 basis points. And those numbers have changed. If you go out a week ago, there was a 63% chance of a rate cut on the June 18th meeting. Now it's only 20%. So it's definitely changed significantly. There was actually a 38% chance of a 50 basis point cut by June 18th. And that no longer is on the table. That's a 0% chance. So all of a sudden, people feeling like the odds of rate cuts are getting much, much smaller. And I think that has to do with a lot of people talking about recession, right? The prospects that we're going to continue to slow down. Now, one other thing that I want to make sure I share with you guys I thought was very interesting from the conference call today with the press. Powell talked about 3 different variables, and I actually wrote a big note here with bold. He says, if they are sustained, so he's believing that things will be sustained. He says that's going to be it'll lead to a rise in inflation. So he's talking about these tariffs, these giant tariffs that have been imposed. He says if those are sustained for a longer period of time, this is where it gets interesting. And he said it will lead to a rise in inflation, a slowdown in economic growth, and rising unemployment. Those are the 3 variables that we've been talking about as stagflation, right? And Bill Addis has said this too. He said, my biggest concern is stagflation here. And what that tells me is that the Fed is concerned that if we continue to get these tariffs to roll on longer and longer and get no resolution, that we'll see rising inflation, rising unemployment, and slowing growth, which is the dreaded stagflation. Yeah, I was like, ooh, when I saw him say that at the podium, I was like, oh, the Fed's already thinking that, huh? What are you going to do now, guys? What are you going to do? Ken Griffin gave his take on this. He sensed modest stagflation. Yeah, it does feel like that's where we're headed, right? Again, some of the data which Jerome Powell was quizzed on at the press conference, people were saying, well, the data looks really good. And he says, well, look, you can't take some manufacturing orders, or at least the last couple of months, because what happened is a lot of people were front-running the tariffs and trying to buy as much goods and services as they could, which spiked the GDP a little bit, made things look great. And now all of a sudden we're not doing all the shipping that we were before, and GDP is going to slow down. So a few more months. I think by the time tarifflation, I like that, Anders. That's a new one. Tarifflation. I think a few more months of this, if once we get to that June meeting, we'll have a little bit better picture, right? As soon as we get to June, so we are in May, we got another little 6 weeks out, so a month and a half. We'll get another set of data. We'll get some more unemployment. We'll get some more inflation. We'll get some more GDP numbers, and may paint a better picture. We'll know better how this curve shifts then. Now, I'm just out of curiosity. I have not looked at this one today, but I was curious what it says here. If you go to December 10th, right now the expectations are still a 38% chance we're going to get a rate cut, 3 rate cuts by the end of the year. And there's actually a 30% chance of 4 rate cuts. Now, this may get updated aggressively tomorrow, but still a lot of people thinking more rate cuts by the end of the year. If the economy if the economy starts to suffer dramatically from ongoing extended tariffs and political uncertainty, then I do think you'll see Jerome Powell start to cut rates just to juice the economy a little bit and keep things going, because by that point, we should start to see unemployment numbers rise. Now, the 4.2% we saw last week for the unemployment rate, fairly low. I don't really feel like it's capturing the mood of business and the economy. I'm hearing more and more. You heard CrowdStrike laying off 5% of the workforce and more companies talking about laying off employees. Those numbers will get worse if this gets more drawn out. So while part of me is bullish because I feel like we could have an instant resolution to some of these tariff wars, another part of me is very pessimistic that this continues to dwell on. So I have kind of like 2 playbooks here that I'm going off of, and I feel Jerome Powell's struggle here. He doesn't know which way it's going to go, and he's confused. So what does he do? He straddles the boat, and I think that today's statement was pretty much that, saying, I've got my foot on both sides, it's going to rock back and forth, and hopefully I will not let this thing capsize on us. All right, we get a whole bunch here. Louis says, on Fed Day, we should have an XLT that helps us understand what's happening. Maybe I can propose that, Louis, to Trading Academy. I kind of do a little bit of that here, but I think for a Trading Academy graduates, it's probably a great idea. The AI chip curve recession had a bigger effect on the market today, I think. Well, I think that part of the market rally today was, let's go back here and show you the daily charts here. Let's go to our daily time frame. Obviously there was some optimism in the tech space, not all of it. So we go to the Magnificent Seven. You had Google today was getting slammed because of Apple including AI in its Safari browser. And there's a big concern that could start to eat into Google's lunch. Remember, they still have 2 ongoing lawsuits with Google. So when we look at Google's price chart here, big down day. I was watching this, debating selling some puts on it down around that 140 level, but I decided to pass up on it until after the FOMC announcement and just let the dust settle a little bit. I've already got some pretty good exposure, so I'm kind of holding off here. But we definitely saw some nice moves up in tech. I have puts on NVIDIA, and those will probably expire worthless here. I'm pretty excited about that. Those are at 101 and expiring this Friday. That was up 3.1%. That's the best of your FANG stocks. You had Amazon rally, which I just bummed. I want to buy. I want to hold Amazon, but I'm being a little shy on that one. You also had Meta with a big rally up. Now, going to SMH. SMH represents the semiconductors and chip space, so that's 2.05% gain there. And, as soon as we can alleviate as much pressure from that chip space as possible, that is a big factor in getting markets to rally and be more bullish, right? So, all right, so 1 second. I'm just typing in some stuff for myself. So with President Trump calling for a repeal of the CHIPS Act, I think that depends on the scope of it, right? Obviously, that opens up a little bit more towards international countries getting our chips. It helps out countries, NVIDIA, companies like that. The question I have until I see everything as it's laid out is how much money comes out of that, right? So that CHIPS Act brought a lot of money to domestic production of chips. I don't know. I haven't had a chance to read all the way through what really is going to happen there when it ends, right? So he's talking about ending it. Hasn't been done yet, right? That's in the works. We shall see. IRS laying off employees. Sorry, I'm laughing. Yeah. I think it's funny. I had this conversation today. Every now and again, I go into the Irvine Center and I'll do a little presentation and talk about markets and whatever. And I had a good session today. I went in. Larry Jacobson is teaching options in there, and I started talking about chip makers and what was I had a great comment there. The IRS. I started talking about technology. I started talking about cryptocurrency and digital assets, and one thing to latch onto here about the future of money, we talk about cryptocurrencies being the backbone of blockchain of monetary systems going forward. At some point, you and I, as Americans, will be on a blockchain that tracks all of our money, right? We will no longer have physical dollars like our dollar bills. It'll all be digital. It'll all be on a blockchain. And that would give the government, the powers that be, the ability to monitor every transaction. And at some point down the road, we will not have an IRS. The Internal Revenue Service will cease to exist because the IRS will be an automated system that simply looks at each one of our spending through an algorithm and payment networks, tracks all our spending, tracks all our income, and says, you owe this much in taxes. So there'll be a lot more layoffs going off with the IRS. Let them go. Let them go. All right, what else do I have in here? Yeah, I'm self-employed. Had to lay myself off. Oh, laying yourself off. That's tough one. Popcorn pop. We didn't get that popcorn pop, guys. I really expected us to have a much bigger move based off the comments. I thought that the comments made by Jerome Powell today were pretty good. It tells me that if this does get into a bad shape, let me bring up the S&P here. If we do get, further declines in GDP or inflation does, at least the Fed is positioned properly that they can do something drastic. Now, he also cited back in 2019, they did several rate cuts back in 2019, but he also pointed out there were different circumstances back there. Sorry, I'm reading my notes over here. He says inflation back in 2019 was only 1.9%. So they cut rates to stimulate economic growth there, and that may have led to some inflationary pressure and inflation, but inflation was low, so that wasn't the concern. Cutting rates wasn't a worry there about juicing that economy. Now, today we have a much different picture, right? The market in 2019 versus today is very, very different. So cutting the rates, I think they're being a little bit apprehensive, which is good. Oh, the AI tweet was up popcorn. Got it. Flat tax, no IRS. Yep, I think that's probably what we'll get. I think we should. I'm starting to lean more in that direction, John. Flat tax, just make it simple and easy. I don't need thousands of pages of documentation. I mean, let's be honest here. If you're someone who's using TurboTax and you stack your taxes up next to somebody who's got a good CPA, the TurboTax person is probably losing out, because a good CPA is going to find all these little places to go and move and allocate. And, oh, you can do this and here. And hey, if you spent this much today, that means that you're actually going to be paying less taxes. That's where the hands of a good CPA come in. But at some point in the future, yeah, I think flat tax will make it so much easier. Oh, he's a libertarian now. I've always been partially libertarian. I think I find myself, John, I see components of the Democratic Party that I like. I see components of the Republican Party that I like. I see components of the Libertarian Party and Green Party that I like. That said, I find parts of all of those parties that I dislike as well. It's kind of like, looking for a partner. You shop around, you find you're never going to find the perfect one. You'll never find the perfect one. There's always going to be something that you just can't deal with. So you go with whichever one fits the picture the best. So certainly I think there's some big flaws with the libertarian viewpoint, but I think most of us would agree that no one should be putting their hands on your money, your assets, what you've earned, right? I think you'd all agree that. That's probably a pretty good principle for libertarian that should apply to all parties, right? If I've earned my money and it's sitting in a bank, you shouldn't tell me that I can or cannot access it. What's going on there? Just maintain the reason why we are here and what we have as Americans. Yeah, love it. Exactly. We won't get a second negative GDP. Don't think so, Big Ab? That's a good topic of discussion, right? What would cause the next quarter's GDP to decline again? And I think that the tariffs would. So if this goes on another few months, right? Let's say it goes on for the next 4 months and we get that next quarterly reading of GDP, I think you could, but to me, the tariffs are what it's all about. If the tariff issue gets resolved, then I don't think we're going to have another quarter of negative GDP. If they continue on, I think we will. Exactly, Lee. I can't always, the Rolling Stones sing it so well. You can't always get what you want, but sometimes you just might get what you need. So, yeah, just be happy that we're here on the right side of the dirt, spinning on this giant marble through space, right? I don't need to get too worked up about politics, just figuring out which way it's going to move my market. So, as far as that goes, you look at what our markets did today, and I was kind of surprised to see, well, at least the last few days, right? We had that bearish Rami formation back on Monday. So Monday we got the second part of that bearish Harami. We got a little bit of follow through as we broke down below 56.55 on the S&P. Gap down this morning and then rallied back up. Now I did expect this to be a relatively low volume couple of days. They were a little higher than I expected, but going into an FOMC day, until that rate announcement, it's usually rather quiet. Usually rather low and not a lot going on. Volume, honestly, is not that significant. I mean, look historically where we are with volume on the S&P. I'll put a cursor right at today's volume. We've got, I would say we're down around the low end of average. We got a lot of really high spikes in here as these markets were selling off. So not a lot of excitement on that one today. I guess really the question for me is, which way do I see it going, right? Which way do I see these markets headed? Well, based off what I have here, I think the markets are rejoicing that the FOMC meeting is out of the way, knowing that the Fed is here to kind of backstop it, which may create that Powell put, where they'll prevent the market from falling any further. Again, time will tell how ultimately that pans out. But technically, from a technical perspective, I don't think that this looks that good, right? We've got this lower highs. You can see from middle of February, we sold off, made a new low, rallied, made a lower high on March 26, sold off, made a new low, and now we've rallied, did not make a new high, and starting to show a little bit of weakness. Even though we had a green candle today, S&P was up, Nasdaq was up, Russell was up, it looked great, still didn't get follow through and break that 57.12 on the S&P. So I'm still on the fence as to whether I'm bullish or bearish here. Overall, my positions are long. You guys know my positions, at least for this account I have here. Puts on NVIDIA, puts on MicroStrategy, puts on SMCI, puts on Palantir, and those are the big positions in the Trader Merlin account that I'm sharing with you guys. So I'm still going to maintain that. I'm still going to have a slightly bullish bias here, but I am selling those puts, lower than current market just to generate 1 to 3% per week, or trying to anyway. We'll see how that one goes. What does Big Eb say? The GDP was artificially affected by the rush to get imported goods in Q1 and Q2. Will be a reverse of that due to tariffs and full inventory. We'll see, but there may also come a point, Big Eb, if there's so much inventory, sold puts, tube top, sold. Yeah, I find myself being much happier as a collector of premium. I think that it's funny that my options mentors many years ago, you look at somebody like a Corey Lane, there's a few people that were kind of options mentors to me. Michael Young is another good one. But they were like, do you want to buy ice cubes or sell ice cubes? And it never really resonated with me until you start getting deeper into options. Like, wow, yeah, I'd rather go to the hottest place on earth and sell ice cubes. Why not? Am I going to have a trade that's an absolute, home run and I get, 100% rate of return in a few days? Not selling premium, probably not. But can I grind out, 1% a week or 1% a month and do that depending on which strategy, do it low risk? Yeah, I'd rather be the seller of ice cubes. But there are times where I go directional. I was just about to go directionally short and buy some puts a couple days ago, but I'm just holding off here. I'm not 100% sure. Well, I'm never 100% sure, let's be honest. But I'm not, the probability factor to me is still kind of wishy-washy in which way we're going to go. Margaret says, but they need you to know how to sell calls if you get put the shares. Yes, of course. Absolutely. Big Ed said, I like the ice cube analogy. Absolutely. Because you know that as soon as it melts, someone's going to come right back and buy another ice cube from you. The choices that we make as sellers is, what strike am I happy at? The Palantir one was an aggressive one. I'm still not out of the woods, and I know Palantir is extremely aggressive, but I have the 101s for Palantir sold. We'll see. Let's go back up to Palantir here and put this a 101. Hold on. Let me actually verify that. I forget because I think my NVIDIAs are 101, and I think that my 1 second, bring up the app here. My NVIDIAs are 101 and my Palantirs are 104, but let me just make sure I get the right numbers here for you guys. Hold on 1 second as I log into this one. Palantirs are 101, so then my NVIDIA is 104. So let's go 101 on the Palantir, 101 on the Palantir. So I've got I'll probably be fine with this Palantir put option, but again, it's still Friday. So we'll see how that ends up going. And then NVIDIA, I'm definitely long-term very bullish on NVIDIA. Those are at 104, but I don't think I have any real worry there at all. I think it'll just continue to move on up. As far as the SMCI, that's covered calls. So that's Yeah, that one I'm underwater on, which is, not the best in the world. And MicroStrategy is the 370s. Those are the ones I'm in right now, expiring Friday. Nice pop yesterday. Nice pop today on it. 392. And I've got a bunch on eBay, but that's in different accounts. So, bought back your Palantir at 110 puts this morning. Made small. There you go. Never go broke taking a profit, Garfield. That's what they tell me. You never go broke taking a profit. Which is, it's funny if you think about that statement. You'll never go broke taking a profit. It's not exactly true. That's not really a true statement. And it sounds true, but you'll never go broke taking a profit. That means even if I have a couple cents of winner, if I take that trade and lock it in, I'll make money over time. Well, not if you take losses that exceed those small winners, then you'll actually be a net loser. So the phrase "you can't go broke taking a profit" is not a true statement. Exactly, John. It needs to be the right reward to risk multiple, right? So that's why you have a reward to risk ratio of 2-to-1 or 3-to-1 or 4-to-1, whatever fits you. The key is you can never let a loser get away from you. Never let a loser get away from you. All right, let's see. Thought it is higher premium to sell puts in demand zones. I guess you don't wait for that. Ideally, I do. I'll wait a couple days and hopefully be selling puts on a down day. Ideally, I'd like to sell when puts are aggressively selling off, which is why Palantir was such a good one yesterday. People were freaking out about Palantir. So you can see yesterday you had a pretty significant gap down, and obviously their earnings were not well received. At the end of the day, Palantir was down 12%. Well, when you have that, there's a lot of people jumping out there and hoping to buy some puts to protect themselves. So never let a green play turn red. Now, that's the goal, right, Oliver? The goal is to ideally as a trader, you never want to take a loss, but you're going to. If you do have a green trade, you want to lock in that profit. But then the key is once you're in that winning trade to let it run. Now, that doesn't work so well for me when I'm doing the wheel strategy. I'm not so concerned with that. What I do look for, if I buy the underlier, so right now I have the underlier SMCI, but that one's not working out so well. But typically, if I'm in something and I buy a directional trade, like buy shares of Microsoft or Nvidia outright, now the goal is to manage that. And if I am selling covered calls against it, I'd like to sell it above the next supply zone. Right, so in that example, if I'm buying, let's say, Nvidia, let's bring it up here. If I buy Nvidia, which looks great right now, Nvidia looks like it's going to keep on trending higher. We've got an ascending triangle, just broke our neckline here at 115. Looks fantastic. We'll probably rally up to about 122 or 123, have a little hesitation, and then continue to move on up. So if that's the case, let's say I bought long and I want to sell covered calls to get extra premium, well, I'm probably going to sell my covered calls above that next supply zone. So let's say I'd sell the 124 strikes against my current position if I was, using that kind of wheel strategy. So that's kind of the key for me over the years has been if you have a nice winning trade on, you want to let that one run as much as possible and continue to move higher and higher and higher, obviously keeping it as long as possible. But there are times where you sell those covered calls and things rip up through it and you just go, I'll get rid of it. Gone, take it away. But there you go. Yeah, but Margaret, you know better than dating the loser or marrying the loser, they say. Don't. They don't take it personal. I don't think you take it personal. Let's see. What else we got here? I didn't really have any graphics today. I didn't get a chance to prepare my graphics for you. Let me put it that way. I did have a couple of interesting pictures. So there was a comment that was made by Jerome Powell today. Let me see if I can get the exact name of it. It was mission creep. So if you guys caught that, there was a comment that was brought up by one of the people questioning Jerome Powell. And he says, do you think that you guys are guilty of mission creep? Which I thought was a very interesting question. Even Jerome Powell looked really confused and asked him to repeat it. Well, what he meant by mission creep was that you're using all these different tools and tactics, hoping to solve a problem, but now you've used so many different things that you're just messing things up. And it was interesting because Jerome Powell was very quick to shoot that one down and be like, no, we have to try different tools. So I, for fun, went to my mid-journey and I said, mission creep, and this is the picture that I got. Not quite financial, but that is a creepy, weird, scary picture that AI generated for us today. All right. Never let a green play turn red. So I could talk for hours on that because That's at the core what I'm trying to do, but I've also violated that many times. One of my favorite moments for me was back in 1998. My mentor was just kind of showing me the way, and I ended up with a $1,000 winner like in the first 10 minutes of the market. And this is early on, like one of my first days. Actually, this technically is my first day. And made $1,000 in 10 minutes. And mind you, my mentor had been telling me, don't trade volatile stocks. Don't trade the most, don't trade large share size, and don't trade the open. On my first day, I traded large share size. Traded literally 6:30 in the morning. I hit that buy button, and I traded the most volatile stock of the day, which at that time was Netscape, NSCP, which is no longer. 10 minutes in, I'm up $1,000, and I'm like, at the time, the class was like a $4,000 class. And in my mind, I'm a math person. I'm just like, oh, well, I could pay for this class real quick, awesome. My mentor comes by, my instructor who just showed me how to do all this stuff, he comes by, he taps me on the shoulder, he says, well, how's it going over there? I said, I'm doing great, man. I'm up $1,000 already. And he's like, what? He goes, there's no way you should be up $1,000 right now. I said, what do you mean? Yeah, there is. He goes, no. You're taking way too big a risk. You're trading the most volatile thing out there. You're crazy. Stop. Turn off your computer and go home. I mean, you made $1,000. You made $1,000 before most people even got out of bed. Be happy with that. So I remember I walked around this courtyard over in Irvine, California. It's right across from the university. Nothing's open. And I remember I was standing in front of, it was a warehouse. That's how old I am. Warehouse, where they used to have like CDs and videos and records and stuff. I was looking in the window and I started like pricing all these items, and I went back and stood in front of the trading floor, and I had this like dialogue between good and evil. And the good side was like, you did so well, you made $1,000 in 10 minutes, you should be happy with that, you're exceeding your expectations, go home. And then of course, as my analytical brain does, the devil side of it, the evil side said, look, you made $1,000 in 10 minutes. That means you're going to make $6,000 an hour. There's 6.5 hours in a trading day. I mean, you could walk out here with $40,000 a day. And of course, I went back in to Oliver's point here. Yep, Margaret, I went back in. I was up $1,000, and by the end of the day, I left the floor hitting my stop loss at having lost $500. So that was a huge learning lesson for me first day. And it was almost like, how do you decipher all of that information in one shot? There was so many lessons to be learned there. But ultimately, you learn from that and you figure out that if I'm up $1,000, there's no way that I would today lose all that, right? If I'm up $1,000, I might give myself, let's say, $300 worth of wiggle room. So no matter what, I'm going home with $700. And that I think is a pretty significant piece that people need to implement. Yeah, I gave it back. Not only did I give back the $1,000, Rob, but I actually lost $500 on top of that. That was a pretty bad learning lesson. And you go from jubilation and excitement to feeling like an absolute loser. Yeah, that was my first day live day trading out of Trading Academy's class. Good stuff, huh? Okay, let's go into other information for today. Obviously, we had the FOMC meeting, but I'll run through our markets here and see how they fared overall. Let's get to there and bring up the top. One of the nice, exciting things was what happened with Bitcoin. It was a good mover last night, and I'll show you that here in just a second. The crude oil chart. We had a great bounce yesterday. Really nice big pop yesterday and gave back some of that today. It was down 1.73%. Trend is your friend till the bend at the end. Still looking weak. NJ. You want to know a real crazy story, NJ? This is nuts. Back then, there was no limit on margin. The guy that ran the trading floor would give you unlimited margin. And of course, you're paying for that margin. But yeah, unlimited. So I wasn't, at the time I started with a $30,000 account. It's 30 or, I think it was 30 or 50. I think I'd say 30,000. I didn't have a lot of money back then. So I started with a $30,000 account, and I could have traded 5, 10, 20, 50, 100 to 1 margin. The margin rules really didn't come into play until that shooting happened in Atlanta in, I think, 99 or 2000. There was a shooting in Atlanta on a direct access trading floor, and then all the rules changed with regards to margin. It was nuts. I've mentioned the story of my vitiligo, right? Did I tell you guys the story about my vitiligo? Ugh, maybe not. That's another one for a crazy day, but All kinds of crazy stories. The vitiligo is a medical condition. It's your skin stops producing pigment, and I have it on you see I have it on my fingers, I have it on my face. All right. Why not? We're on storytelling mode. It's not really trading. Well, it is trading related. So back in the late 90s, we had these old school computers. You guys anybody who's been to the Trading Academy centers, you see that poster on the wall of all the computers? I'm in that picture, right? Are those still regional stock exchange? Thanks, Lee. There are still some regional ones, but no one that I know uses those. They all trade through the big exchanges. So if you look at that floor, that's the picture of the trading floor that they always talk about at the Trading Academy. It's on every wall. So next time you're in the center, check it out. You can spot me in there. I'm actually in there. And in the back corner of that was it was a pit. It was like where the really active guys were. And that's where I was. So I come in one morning, and we had a couple different tech people on the floor. One guy's name was Trey. One guy's name was Mark. And I think that the other guy's, it's been so long. His name was like Wes or something. So we had these 3 tech guys. And their job was purposely to roam around the trading floor and resolve any tech issues if you had any. So at the time, I was using CyberTrader, which is no longer. It was bought by Schwab, unfortunately. It was a great platform. So I'm sitting there using CyberTrader, and it had default sound effects. Some of your trading platforms may have sound effects. Well, this platform, when you were executed, it would go ding, just a little bell ding, right? So I had my keyboard all set up for hotkeys. CyberTrader was all built for hotkeys, meaning I just hit like F4, and that buys 1,000 shares at market. So I've got a $30,000 account, and I'm sitting there, and markets are moving. I got people all around me. We're all talking as we usually do. And the one guy across me goes, "Hey, Microsoft, check out Microsoft." So I bring up MSFT. At the time, Microsoft was like a $90 stock. And, ooh, I like it. And I hit F4, which is buy 1,000 shares at market. No sound. My brain is trained to listen for that ding, right? It's just conditioned. I'm Pavlov's dog now. I need to hear the ding. So I don't hear the ding. I assume that order didn't go through. I hit it again. Nothing. I'm like, what the hell? And now I'm just pounding on the keyboard. I'm like, hey, and I'm yelling for the tech guy. I'm like, hey, Trey, it's not working. It's not working. My computer's frozen. My computer's frozen. So Trey shows up, and he gets right in my face, and he's like, what's going on? And right as he says that, my computer just froze up, but there was a buffer for all of that, and it starts going ding, 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 ding. It just kept going, and I swear, I wish a camera was on my face, because I know that with every ding, you could watch my face get dimmer and dimmer and go into an absolute Casper the Ghost face, because I was like, oh my God. If you look at, I was going to bring up a calculator here just to show you to give you an idea of how crazy this was. When the computer stopped beeping, I was in 17,000 shares of Microsoft. And granted that was $90 per share, I was in a $1.5 million position, which, my original account was $30,000. I am way over leveraged. So NJ, you sparked this conversation, but I'm glad you did. There was no margin limits. And, this one, it freaked me out. And I remember Trey was like, hey, do you want me to get you out of this position? And I remember mumbling, just like, And you could see on the time in sales, because I could watch, it was just 1,000 share blocks going boom, 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 boom. It was all my order. Fast forward, I know you guys all want to know the answer. Yes, I made money on the trade because I literally moved the markets. The 1,000 share orders were just taking out people because I was buying at market. So it was taking out people on the offer side, removing them, price started to move, and then other day traders jumped on it. So it actually started to move. I ended up making like $750 in the trade, which wasn't a lot considering how much I had at risk, but it ultimately made money. Now, here's the lesson in this. I started getting these weird white spots on my fingers and on my face. I can have one on, I forget which side it's on. I've gotten better at it, but there was one on my eye. There was a big one on my mouth, on my hands as well. And so I go to the doctor, and he's asking me a ton of questions, and he says, so do you have any history of hereditary issues with regards to vitiligo? What you have is vitiligo. Like, okay, vitiligo, cool. Don't know. He says, do you have any hereditary? I go, no, I've got nice olive family skin. This is what is this? And he goes, well, sometimes extremely traumatic events can trigger it. And he says, what do you do for work? And I go, I'm a day trader. And he just started laughing. He goes, I'm guessing you got a pretty stressful job. And I remember sitting in his office going, Microsoft. I knew exactly the trade that it was because it stressed me out so much that I now have a permanent disfigurement, if you will, with my vitiligo. Now, I try to stay out of the sun, but yeah, there's the story of how I got my vitiligo, was Microsoft. Microsoft was the villain here. The bottom line and moral of that story should be never get in over your head. Don't put yourself in such a stressful position that starts to change your chemistry. And that point, that was chemistry. Did the SEC check you out as a market manipulator? No, man. There were people on that floor last that were doing way more than me, way more. And there wasn't a scrutiny on that type of trading back then. It was just volume, right? They just cared about volume. And we were actually trading through Southwest Securities out of Texas, so they just became a major player. Look, I was doing such volume that I was invited to Southwest Securities in Dallas, Texas to go onto their trading floor because they're like, who is this guy? I was doing so much volume. It was an honor, but also embarrassing because the person who ran the trading floor was the one making all the money. You know, after a day of making 550 trades, which was my average in the late 90s, you know, I'd finish the day and my screen would say, oh, you're up $15,000 today. And you're like, yeah. And then you go back to collect your statements and it's like, oh, well, you paid $14,000 in commissions. Like, wait, so I made $1,000 off all that? Oh, brutal. You know, and that's when I started to realize that this is a business. This is not a game. It's a business. And part of my business cost is overhead. Overhead is transaction cost. Luckily for you people today, you don't have to worry about it, right? Stock trades, zero, no cost. Remember, when things are free, there's usually you're the product. But for the most part, you guys don't have the same pains that I had back in the late 90s. All right. Now they invite the bot and algorithm. And there's certainly bot algorithms out there. Now, I don't know how it would react to me because I was an outlier. I mean, if you look at the way my orders and transactions happened that day, total outlier. That was not a normal event for that market. All of a sudden, just be machine gun with 17 consecutive orders of 1,000 shares. And I'm sure other traders around me jumped on that one as well. Never thought trading could give you a disease. And I thought... Well, I guess we all have to know the risks of everything that we do, right, JD? And, you know, it's a terrible story. I guess it's good on one hand because it didn't, you know, it's just skin pigmentation, so it's not the end of the world. I don't like it because, you know, sometimes I feel like I'm a monster. If I get a tan, I feel like I'm a monster and people look at you all weird, but it could have been much worse, right? I could have had a heart attack and died. I mean, that was a pretty stressful darn trade, but I was too young to die back then. Anyway, there you go, NJ. That was a long-winded answer to your question. What if it went the other way? If you didn't have money, how would you pay them? So you want to know why the shooting happened in Atlanta. That's when everything changed for day trading. What happened was a guy just like me, but he shorted the market. And they had given him, 50 to 1 leverage or something. And he had shorted heavily. And it was some biotech stock that, gapped up like 100% and just screamed to the upside, as you've seen happen with biotech stocks. I think it was a biotech stock. So this guy had like a $100,000 account, but because he was short, you have infinite risk. Normally, if you use no leverage and you go long $100,000, that's your max risk, right? Well, with the leverage, he might have been in a couple million. So when this thing jumped up 100%, not only did he lose 100% of his initial capital, but all that borrowed money too. And they said, hey, you owe us, a few $100,000. And he said, the hell I do, and started shooting people. I think he was shot by the police, I think. I don't remember. That was a long time ago. But yeah, that was when margin just got killed in the United States. After that, they put in the 4-to-1 day trading rule, right? 4-to-1 for day trading and 2-to-1 overnight are the maximum you can get here in the U.S. But, man, it was infinite for me back then. And like you said, JD, if I was in a short trade and it went screaming against me, I could lose every penny of my investment and be responsible for a lot more. That makes sense, John, that it destroyed his life. Absolutely destroyed this poor guy's life. Unfortunate. We actually had to, they hired a security guard that was right by our trading floor door right after that. When it was really creepy because we had this one guy on the floor. His name was Ray, but we all called him Shooter. Because we were like, we're taking wagers, like, of all the people on this trading floor, who's our shooter? We're like, Ray. All fingers pointed at Ray, so it made us nervous for a long time. Steve Missick was so stressed out that he had to get psychological help. I could totally see that. And so maybe we've changed our discussion here completely, but, I think part of what we have to do is, pay attention to the trades, make sure that, make sure that we take care of ourselves. Don't put yourself in something that's too crazy. And just be careful because you could find yourself in a situation that's way too dangerous, way too impactful, and next thing you know, you're losing tons and tons of money. Careful. You only have one life. Take care of it. Always figure out who the shooter is when you enter a crowded room, and sometimes you never know. That's a sad reality that we have to think about that all the time. It's like, oh, here's the shooter, and do shooter training, active shooter training. Crazy world we live in. All right. Story time's over, folks. Sorry for the total left-hand turn. You can blame NJ for that one, but thanks, NJ. You got some stories out of that one. Let's go into your economic announcements for mañana. I'll show you this real quick just so we can see it. It's been our fourth meeting in a row. Well, third that they've held, but we've been at 4.5% on the Fed funds rate, 4 meetings in a row. So that's great. It's good news. And again, I think it's the right thing to do. Kind of keeps them open to needing to be reactive. I think people are so worried about, are they ahead of the curve or behind it? I think that they need to be there when we need them, as opposed to jumping the gun and doing crazy things that could completely distort this market. There's too much uncertainty to start dropping or raising or lowering rates right now. You just don't want to add that to the system. Now, let's look for tomorrow. Let's get back to some semblance of reality here and get back to more Fed announcements. You'll see right here we have the Bank of England is expected to drop their rates. That's going to happen at 7 o'clock in the morning tomorrow. They're expected to drop 25 basis points from 4.5 to 4.25. And then for us, jobs data, again, unemployment claims numbers coming out. That's 1 hour before the market opens. You also have non-farm productivity, labor cost. You have wholesale inventories as well as natural gas and some bond auctions. So a fairly busy day here from the U.S. perspective. And then let me go to my earnings calendar, which I did not have up and ready for you, but I will get that right now. Here's your earnings calendar for Thursday, May 8th. Let's sort by market cap. So not a lot of big names. You've got Shopify, Anheuser-Busch or AB InBev, ConocoPhillips, McKesson, Monster Energy, Cheniere might be an interesting one, and Coinbase as well. Let me check out Coinbase. Coinbase has been pretty darn volatile lately. So let's go bring up COIN. No, not too bad. Still kind of hovering around that $200 mark. So big sell-off that follows all the crypto and the equity markets, but showing some promise because it hasn't made new lows. So they're coming out with earnings tomorrow. And that's pretty much it for your announcement. We'll find out tomorrow, Margaret. Well, not only find out how the bond yields have been doing, but we'll be talking with Bill Addis. So always exciting to talk to Bill Addis. All right, let me look through your comments here real quick, and then I'll wrap up. Some people can't handle losing money. It's a necessary skill. It is an absolute skill. Look, and Margaret, I think you'd agree with not one person in here wakes up going, yeah, I want to lose money today. And no one would say that. No one wants to lose it. But it's kind of like saying, I used to play baseball when I was younger, and I hated striking out. But I knew that I had to swing the bat. If I didn't swing the bat, I'd never get on base. So I need to swing the bat and build myself a skill set that proves to me that as a baseball player, I can make contact more than I miss and strike out. And therefore, it's worth taking the chance. So if you are not okay with taking losses or you refuse to take losses, then switch immediately because you'll blow your account. If you have to be able to take losses as a trader and shrug them off. I know we've had a couple comments from some of you in the past who have had really bad losses and how do I deal with it? You learn from it and then you put it behind you and don't look back. Like relationships. To move forward, it'll just torture you if you keep double guessing everything that you did in the past. Move forward. Nowadays the kids know who it will be before it happens. Oh, yeah, that's the sad part. Oh, man, I don't even, the thought of having kids in school just scares me. In my day, the worst thing you had was a fight by the bike racks after school. No friends. 2 years tried and still no gains. Still try. Well, Luis, if you've been doing this for 2 years and you still don't have any gains, you've got a lot of data to work with, and you should be able to find out what's causing a preponderance of your losses, right? Step number one is what's causing your losses. Are you trading too big a share size? Are you, going counter trend? Are you what's causing it? And you should have enough data there to break it down and at least figure out what's causing the hemorrhaging, right? The losses. And if you can start to cut that out and reduce the quantity or the quality, if you will, of your losses, then you should start to see that pendulum shift to where you start getting gains. Because ultimately, if you remove a big loss altogether, that translates into more gains because you're not erasing your gains with big losses. So spend some time, dig into your trade plan, Luis. Dig into your trades, analyze what you're doing. Don't worry about your winners at this point. Just figure out why you're having losing trades, how much you're losing, what your reward risk ratio is, stop losses, that type of thing needs to be written out. Micro futures are great for learning how trading futures, 100%. Problem, Margaret, is people get frustrated because they're not going to make any money. If you're trading micros, you're not going to make enough money to be a living. There's no way. But it helps. Today when I was in Larry's class, someone was asking me about crypto and, where can I get high leverage in the crypto markets in the US? And I said, you got to start trading without leverage. If you can't make money without leverage, leverage is just going to mean you're going to lose that much faster. So, go to no leverage whatsoever and take low risks until you get comfortable taking losses and accepting losses. All right, that's going to do it for me, everybody. Sorry, we went on some big tangents here. Still works, but don't give it back. Mental. When I do paper trade, I do great. When I do real trades, I don't let them run. Mental part kills me. Yeah, Luis, here's my simple analogy. I know it's a crude one, and I apologize, but paper trading is the equivalent of opening an adult magazine and saying that you've been with a member of the opposite sex, or the same sex, whatever floats your boat. It's not even remotely close. Paper trading, there's no emotion. So go back to one share. Go to one share of something. You're not going to make money, like big money on it, but it's about routine. It's about practice. It's about developing your skill set and your confidence. And add more shares as you get more comfortable. That's how you're going to do it. To me, forget paper trading. Forget paper trading. Just go to live real trading and do it with one share of something that doesn't move very fast. So you can sit back, watch it move, allow yourself some time to react, and as you get better, you add more contract size or share size, and you start moving it in things that move a little bit faster. Yep. Reduce risk on losing trades. Well, you could reduce your risk when you're in a trade, but it's too late, right? You should have your risk management skill set defined before you start making that trade. Here's how much I'm going to risk. Period. And if it gets to here, I'm out. Okay, and if it takes you out, then analyze. Was that stop in the right place? Right? Should I have made it a little bit larger, shorter? What could I have done to prevent myself from getting stopped out on that trade? And then you learn from that. And maybe you modify. Maybe you look at things like ATR and how much that security moves. And was your stop too tight? You can start to pick apart your trades, but you got to do it with real money, man. Just get out fast on losers. I don't know if it's necessarily that you get out fast, but you get out when you tell yourself you're going to get out. So if you say you're going to take a 10-cent loss per share on this trade, and it's now at 11, what are you waiting for? You're supposed to get out a penny ago, right? Just get out. So to me, that's the key. Because I don't want to sound hypocritical. I'm walking proof of this. There were many trades where I'd say, I'm going to lose 50 cents per share on this one, 50 cents. And I got all mapped out, and it drops down to 50 cents, and it just ticks below 50 cents per share. Now I'm down to 60 cents per share. Oh, you know what? I'm going to buy some more. I know this thing's going to come back. I know it. I just know it. And that's where you kill yourself. It's not doing what you thought it was going to do. You're violating your plan. You're going to lose it. You're going to lose big time. So never add to losing positions, right? You only add to winning positions, and you make sure that if you define, here's how much I'm going to risk, never violate that. It'll start to give you confidence that you can adhere to discipline. I'm making money in a paper trading account. Now it's time to lose it in a real one. Hey, and by the way, Andres, this sounds rude, but shut up. Don't say that. Do not say now it's time to lose it in a real one, because you will set yourself up. I did that early on. I walked on the trading floor and I told my mentor, I can't wait to see how much money I lose today, because I was on a losing streak and I did nothing but lose. So you got to tell yourself, okay, I've got these rules for paper trading. They're working. Let me go into real live trading and know that this is risky. I know I have real skin in the game. I have to follow the same plan I did on paper trading and not deviate at all. If you can do that, then you'll be okay. I need to read the affirmations from Trading in the Zone every morning. Yeah, exactly. You have to think positive. If you think you're going to lose, you're going to lose. You have to manifest. Part of it's manifesting positive attitude. Absolutely. I like that, Chris. 2, be patient. 3, set your trade. 4, manage it. Yep. Everybody should read that book. A good book. Take profit and manage the trade. These are $1,000 advisors, Merlin. Oh, no problem, Aga. I mean, look, I have no skin in the game in your trades. You know, ultimately, you guys are going to do whatever you need to do. But if I can help you out in getting on that path, then, hey, awesome. And I think that's me, not just myself, but I think everybody I work with at Trading Academy. It's like the only goal is student success. You know, why wouldn't it be? There's no other interest in. There you go, Andres. Take back those words and just be positive, man. You told yourself I could paper trade and make a profit. So in your mind, you should be like, then I can trade real money and take a profit. Just know that you cannot deviate from your plan. Your plan needs to be solid and stick to your rules, man. As soon as you start modifying mid-trade, you know, the changing the horse midstream type of thing, you're going to lose. All right. Awesome. Well, totally different show today. Not the direction I thought we were going to go in, but hope you guys appreciated the storytelling, the risk management psychology. You know, there's a lot of losses that backed up my statements there. It's not just, hey, I read a book on trading. I've been doing this for 28 years, and every mistake that I'm badgering you on, I've made. Trust me. Absolutely. PhD. It would be funny to have a PhD, but no PhD for me. I refuse to spend that kind of money. Unless I get an honorary doctorate somewhere, I'm not spending that kind of money. Real life is the best PhD ever. All right, guys, that's going to do it for me. Tomorrow we have Bill Addison in the program. If you want a question answered by Bill, you have something that you're curious about, let me know. Email me at tradermerlin@gmail.com. It's on the screen right there. Or put it down below any of the YouTube videos, and I will add those to the show for tomorrow. Thank you guys so much. Have a fantastic remainder of your day, and I will see you mañana.